Welcome to Under the Basswood Tree with Basswood Counsel, a podcast where we bring you brief, valuable conversations and insights to help you navigate the complex world of business transactions. From cross-border deals to international tax structuring, we cover topics across all industries. Our team and colleagues will share their insights and provide practical tips on key issues for you and your business. Let's get started.
Hi, and thanks for joining another episode of Under the Basswood Tree. I'm Klug of Basswood Counsel, built for what's next. I'm here with Meritxell Mont of Capital Auditors in Spain, and I'll let her introduce herself.
Well, thank you, Chris. Happy to be here again. I'm a tax and corporate lawyer at Capital Auditors and Consultants. We are a firm from Spain. We're located in Madrid and Barcelona. I'm very focused on working with international clients, which has companies and also individuals which have some sort of interest in Spain, and we try to make everything as simple as possible for them. So again, thank you very much for having me.
I can tell you, Meritxell is an excellent attorney, and we're very lucky to have her to talk about this topic. So this is part 2 of a series that we're doing on U.S. companies going to Spain, and then we'll look at Spanish companies going to the U.S., and then we'll move on people either moving from the U.S. to Spain or Spain to the U.S. and just talk about the legal tax issues and other considerations that come up. And so in this episode, in part 2, we're going to continue kind of starting operations in Spain, but talk about what are some of the common legal and tax misconceptions, what factors go into choosing the right structure for a U.S. company to go to Spain, and what are some things that will happen or to think about in the first 12 months. So to kind of start, Meritxell, what would you say are some of the common legal and tax misconceptions of a company that's coming into Spain?
Well, the first one is assuming that the jurisdiction works exactly the same as the one that you are used to. As we saw in the other episode, Spain and the US are very different on some topics, for example, in labor law or in tax. So having that assumption can be a little bit dangerous if you're a company looking towards expanding into Spain. I think you have to be very open-minded in this sense and be able to trust your advisors, because you're not going to be used to the things that they are going to be telling you. For example, on employment matters. Doesn't mean that they are worse, but they are different. So I think that's the most asked thing that we have. Like, why is it so different? Well, first of all, because it's a completely different country. Another misconception that we have is that we have different taxes depending on the part of Spain. That's true for individuals in some cases, not that much for companies. So it's also something that they ask us, right? Is it better if I set up in Barcelona or in Madrid or in Malaga? In terms of taxes, it doesn't really make a difference. It makes a difference in terms of infrastructure, in terms of the industry that you have, and things like that, but not really on taxes. And I think that's something, for example, in the US doesn't work like that. So when they come here, it's something that they always ask us.
Okay. If anyone's working with me, they have a great US-based structure going. And I assume we can just replicate that in Spain. Is that how it works?
No, exactly. You can do that. Definitely.
All right. So I could just set up a limited liability company and be all good. Or there's different entities. The U.S. company coming to Spain, as you said, they have to be open-minded. There's going to be different types of entities with different types of requirements. And the structuring might be different for tax purposes, right?
Exactly. It really depends on your needs as a company. Okay, what are your needs? What are your plans in establishing operations in Spain? That's the first thing that we have to take into account when we are deciding on which is the best structure. Also, as you have pointed out, which is your structure in the US, which is the structure of the parent company. It's something also to consider. Just to give you different cases. If we want just to investigate the market, there's no need to set up directly a limited liability company, for example, in Spain, a subsidiary. We can start with something small, maybe hiring someone, having some sort of if it's not a salesperson, they can be just reporting to the parent company. Then this is something we call a non-resident entity. Very, very simple setup. For example, we already know how the Spanish market works. We are very safe in starting the company. Then we can set up a limited liability company, a subsidiary. Other option, we are a company in the US. Our brand is very well known. We have everything very well tied regarding our know-how, how everything works and everything. Then maybe the branch is the best option for you. So it really depends on what are your needs and what type of company you are.
Okay. If a company's coming into the U.S., you can kind of start with hiring maybe like you said salesperson or broker who they're not just selling your product, but they're selling from multiple. And that in the U.S., at least, that doesn't create like necessarily a taxable nexus into the U.S. But in Spain, it sounds like there's something similar where you don't initially have to have employees, but you could start with what we would call usually like an independent agent. Someone that you contract with them and they'll try to sell your product into the country.
Well, it's different in the sense that if you are hiring someone which is more maybe marketing or doing like a study of the market and things like that, it can be, or definitely just someone which is reporting directly to the parent company and there's no real work happening in Spain. Then we have the non-resident entity. This is an entity that we register the company in Spain for social security and taxes, but there are no real tax liabilities in this company. It's just for payroll purposes. So it's a good way to start. If you don't have it very clear and you want to feel comfortable with the Spanish market, then I think it's perfect. But for example, if you're hiring someone which is in sales, or it's an executive of the parent company or a director, then we are creating what we call here in Spain a permanent establishment, which is basically you are having a presence in Spain that is taxable. So Spanish tax authorities are going to be knocking at your door and telling you that you have to be setting a company because you have to pay the corporate income tax. So as I've said, it really depends on each case, what is best and what is not. And the industry itself, the recommendation that I would give regarding how to start. Also, this can be an option, right? I hire someone in sales. I know that I'm creating a permanent establishment. I know that for the first couple of years, I'm going to be taxed in Spain, but I'm not setting up a fixed structure as of yet. That's also a way of starting.
Okay. So it's important to understand what your footprint is and that it can grow and there's a way to grow that footprint in Spain that makes sense. There's steps, I guess, to it. So it's all part of a strategy. I understand that sometimes companies from outside of Spain can be confused between a sub-company and a branch. And what are some of the factors and what are some of the confusions that a non-Spanish company might have about that?
Well, they are completely different structure, okay, here in Spain. The subsidiary, at the end of the day, it's a limited liability company or a public company, okay, that depends 100% on the parent company. Parent company is the owner of the Spanish one. That means that the company in Spain is completely independent, can use, for example, a different name, can have a different activity if needed, completely different. Okay, that's a subsidiary company in Spain. Normally, this is the structure which is most chosen because of liability. Because being also a different structure means that if there's any sort of liability in Spain, it's staying in Spain, okay, unless it's something very, I would say, serious. It doesn't go to the shareholder, which is an American company. So that's why the subsidiary, it's a very well-known option and very popular. The branch is an extension of the parent company in Spain. I always say it's like an arm, okay, of the parent company. It's not independent. It's not separate from the parent company. It's just that we are setting up some sort of presence in Spain, but it has to have the same name, the same activity. You can't change, okay, the things. It has to be exactly the same, but in Spain, okay, adapting to Spanish jurisdiction. So, as I've said, it depends. If I'm a very well-known brand globally, it doesn't make sense maybe to set up a subsidiary. Maybe setting a branch, it's enough because then I can maintain all of that. If I'm a normal company, okay, I would say maybe the subsidiary it's better because you are setting the liabilities and at the end of the day, it's equally easy to set up. So the real difference is regarding the liability and regarding how separate you want to have the Spanish operations regarding the American ones.
Okay. And let's dig into that a little more. In choosing the right structure, I think you mentioned some of the factors, but I think one of it is if you're a well-known brand, then maybe the branch works. But if you're not necessarily smaller, but if you're entering the market, they don't really know you, having that separate liabilities kind of aims towards a sub-company. Do you have any other kind of key indicators that you look for in kind of structuring how a company should enter?
For example, also regarding the industry, if it's a highly regulated industry, sometimes setting up a branch makes it easier than setting up a subsidiary, because setting up a branch is an extension. You don't have to start everything from scratch in terms of licenses. Whereas if you're a subsidiary, you need to really start from point zero. So, for example, the industry also, it's a key factor here. I would say that's it. Like, really, what's your plan? What's the type of company that you are? What are your needs? And what is the industry that you are dealing with?
Yeah, it's interesting in the U.S., and you'll get various perspectives. It's a little different, I think, in Spain and with the EU, that once you cross the border, it's a separate country and not a separate state. But, there's some advisors in the U.S. that say you should set up a sub-company in every state. Some try to separate employees from the product or the workforce from the inventory or whatever it might be. So there's a lot of factors to think about. Some of it's tax, too. Very interesting. And you said as far as companies go, though, the tax rates don't change depending on where in Spain you are. Individuals, that might be a factor. Okay.
Exactly. Well, we do have, it's not 100% accurate because, for example, in the Canary Islands, which is a region of Spain, we have a separate tax regime. But as every favorable tax regime in the world, you need to be compliant with some requirements, that they have in order to benefit from it. It's true that we have that, in the Canary Islands, but the truth is that if you're not going to have operations in the Canary Islands and people being hired there, it doesn't make sense to set up a company there. And whereas the rest of Spain, the Spanish territory, which is the peninsula and the Balearic Islands, you really don't see a difference in this sense, regarding taxes, at least.
Okay. Yeah, I mean, in the U.S., I think that Canary Island difference, we have that with some of our territories. So Puerto Rico, United States Virgin Islands, and some of those try to have tax incentives where they hardly tax the business to get more people, more operation, more revenue at the end of the day. Not sure if that part of it's the same, but we do have that where they're part of the U.S., but they have a separate tax regime from the U.S. Very interesting. All right, so let's say in the first year of operations, what should a U.S. company or a company going to Spain kind of expect they need to comply with, or what should they know about?
Well, the first year, I would say it's crucial if you're a foreign company setting up in Spain, because it's the year that you're going to start get familiar to the different regulations in Spain regarding employment, regarding taxes, and regarding the whole system, how it works. So I think the most interesting things to take into account if you're an American company and it's your first year of operations in Spain is the moment that you're going to be hiring staff. That's always very, very important, and it's a crucial moment for them because it's the moment that you need to understand how it works, how you want to structure it, if there's really a need of the staff or not, because as I've said in the previous episode, it's not that easy to get rid of employees afterwards. So it's also a year, I think, of lots of planning, lots of strategy meetings with your advisors regarding all these different topics, especially regarding tax and employment, I think, which is, I would say, the most different things compared to the U.S. operations or U.S. market.
Okay. And then are companies in Spain, like, statutory required to keep their accounting and books and records in a certain way, or is it different between public and privately held companies?
No, they are actually very, very similar in this sense. Here in Spain, just to give you a rough idea on how the tax system and the annual accounts system works, we do the VAT quarterly on a journal basis, and then the corporate income tax, which is paid after the first year of operations. For example, in this case, if you're an American company starting. Regarding the annual accounts, it's actually, if you're a subsidiary, very simple. If you're a branch, it can get a little bit complicated, because at the end it has to make sense also with the parent company accounts. And it's not a difficult process, They need to be everything held in the minutes, as in the US, I guess. You have to have the record of everything afterwards. We have to submit it in the commercial registry of Spain, which is the body that is regulating the companies. It's a public body. And then regarding, for example, audit requirements on the annual accounts, it depends on the company. Okay. We have different, I would say, thresholds. And if to comply with them, then you are obliged to perform an audit on your annual accounts. But it's not the most common thing for small companies, for example. So it's not a difficult system to follow. Okay.
Now, that's interesting. In the U.S., it is similar. Publicly traded companies, because they're going to register with be publicly traded, they have to have audited financial statements, file forms every once in a while. And then, if you're a corporation, which is under state laws, but under corporate law, you got to keep minutes and all that. But a privately held company doesn't necessarily have to have their financial statements audited. Now, if you're taking on investors or doing something along that lines, a lot of times they'll say, we're not going to invest in what's, try to get a bank loan. They're going to want to know that your books are somewhat in order. So there's a little, as far as audit, because I know at least some countries can be stern that everything needs to be audited. In the U.S., an audit can be very expensive. Let's see. So that's interesting. You mentioned something called the VAT. What's a VAT?
The VAT is the sales tax that you call in the US. It's something that every company, at the end of the day is subject to. And it's something that we submit the tax advisors every quarter, generally speaking. There are some regions that allow you to do it on a monthly basis, which sometimes companies prefer because it gives you a little bit of control on, for example, the cash flow in this sense, but normally it's on a quarter basis. For example, in Spain, we divide it into different tranches, The general regime is 21%, on the sales tax.
Wow.
Then depending on the product or the service, it can be less, It can be much less. For example, if it's food, it's less. If it's depending on some services, if they are considered essential services, it's less as well. Because at the end, that's something that it's added into your price as a consumer. So depending on the good, we have a different tax. And also something that it's very interesting is that, as I've said, you are not in Spain only, you are also in the European Union. So that means that you are going to be dealing with many European companies, many European consumers, and that can change, right? The VAT is not the same in Spain that it is in France or in Germany or in Greece, for example. So we have something that we call the European VAT, which is basically a regime by which when you're doing, for example, your invoice to another European company, you don't add the Spanish VAT. You don't add that 21%. Afterwards, that European company, for example, a Greek company, when they declare that invoice, they are going to be adding their own VAT, which I don't know in the case of Greece, but maybe it's less than the Spanish one. So it's a way that we have here in Spain and in Europe to incentivize that companies, European companies, do business between each other to make it easier. So that's why I say that when you are setting up in Spain, you are accessing a whole market because it really makes it very easy to deal with the other countries in terms of, for example, this on taxes.
All right. So the value-added tax, someone in the U.S. should kind of think of it similar to the sales tax.
Exactly.
And I know we touched on employment, but in the U.S., one of the big risks, while it's employment at will, where you can get rid of people if you need to, there is, if you don't make your payroll, and if you don't withhold taxes, that is one of the areas that's heavily enforced. And that would be a reason why a company coming from outside the U.S. specifically would form an entity in the U.S. because that company outside the U.S. would not want to be liable for that issue. Now, we assume everyone's going to pay their employees, but things can happen, honest mistakes, but it's an area that's heavily enforced, so it's helpful to have that separate entity to take on that responsibility and not have the entity outside the U.S. be responsible for it. I don't know if it's similar in Spain or not.
It's a little bit similar as well. Here in Spain, we have the withholding tax on the payroll, for example, that you pay to the Spanish tax authorities. You as a company, you have the obligation to do that and to deduct that from your employees and afterwards pay it to the tax authorities. But it's completely different, for example, to the social security contributions that we have here in Spain, which is also a topic that surprises our American clients because it's a cost for the company, actually. The company is paying that the employee is subject to this on their payroll, to the social security cost. In Spain, again, it depends on the position and everything, but it can be very high. So at the end of the day, it's something that you have to take into account if you're expanding here, that the labor costs, they are still lower compared to other countries, but it's not only what you are paying to the employee and afterwards to take that into account from a cash flow perspective on the withholding tax, but also the social security contribution is something that you have to plan ahead of.
So do you have something like universal healthcare or something?
Yes, we do. When you're Spanish resident, you do have it. That's paid by the social security contributions of the employees, yes.
Okay, but the contributions are made by the employer, right?
Directly by the employer. The employer is the one who pays it.
Okay. You may have heard in the U.S. we don't have that. We don't have a universal healthcare system. So on top of all the other expensive stuff in the U.S., healthcare is private. So that would be another factor to consider, because one of the employee benefits you have to think about that adds a lot in the U.S. is health insurance and how you're going to cover it and how much you're going to cover. Now, in this situation, but it could be a U.S. company with a Spanish sub, which then has maybe even operations in other countries around the EU. Can you kind of arrange your dealings between these countries to manipulate the tax so you pay as little as possible in the highest taxing jurisdiction and allocate the most to the lowest, or do we have to be careful about something there?
You have to be careful, okay, if you are dealing with this type of structures within the European Union, because at the end of the day, even though our tax systems are different between the countries, so as I've said before, the tax rate might be different, the bureaucracy of the tax office might be different. The administrations are very well communicated between each other. So if you're a company that is, for example, having a separation of operations, for example, between Spain and, just to give you an example, Lithuania, okay, which is also a very popular destination for this type of transactions and setting ups that you were mentioning, it can be very difficult, okay, because of this, because at the end of the day, we are all part of European Union, and administrations are communicating all the time between each other regarding the taxpayer. So we always advise to be very, very careful on this topic.
Okay. And what's commonly referred to as transfer pricing between interrelated companies. Do you typically have the accountants or legal advisors involved on doing like transfer pricing studies or helping them figure out what that cost should be on intercompany transactions?
Yes, we do have that. For example, our team can help with that. And also depends, as you know, on the company, and depends on the volume of the transactions they are having with their different subsidiaries or parent companies abroad. So we advise on whether you are obliged or not to that, and also how to plan, how to declare everything, how to proceed accordingly in a compliant way.
Okay. In the U.S., it's interesting. I mean, usually only the largest of the largest corporations get flagged on it, but nonetheless, you got to think of a smart way to do it with the small, the medium-sized businesses that are going cross borders, right? You don't just want to ignore it. And so it's important to document. Transfer pricing studies in the U.S. can be quite expensive, but it's important to have everything planned, figure out what your compliance, how you're dealing with it. And I think that's the next point is what I see sometimes when I have a company come to the U.S. or I'm advising a client going outside of the U.S., I'm big on getting the advisor team together. What I see is a failure too often, and even amongst professionals, is the lawyer won't talk to the accountant won't talk to the lawyer or the tax advisor, and that's just in the domestic country. Now we got 3 new advisors in, let's say, Spain, and now the lawyer won't talk to the other lawyer, and, it's just kind of, you do your thing, and to me, that's just a recipe for disaster because it puts the client in the middle, trying to figure out legal, accounting, and it takes them away from doing their business. Maybe they have a general counsel, but again, everyone, in my opinion, should be collaborating together to get the best result, which is kind of give me your perspective on that and see, what have you seen in the past?
Well, I think you are completely right on this. Unfortunately, there are lots of risks for the client due to this lack of coordination between the accountants, the lawyers, not to say about the lawyers and accountants located in another country, because there are implications and there are things that you need to take into account regarding the operations, regarding legal things, regulations, and everything. So I think it's very, very important that when you are expanding to another country, you make sure that your lawyer, your advisor, is used to work in an international environment and is going to be able to coordinate with the professionals in this other country. This is something that you and me will see a lot between both of us collaborating together, Spain, US. Yeah. I think it's something that should be the rule for everyone, for every company, when they are doing this sort of expansions or this sort of plannings. You have to make sure that they're going to coordinate, that they're going to be communicating with each other. And then it's not only because it's easier for you as a company, but also because you are going to probably save on a lot of risks and compliance issues.
Yeah, I mean, it's interesting. To me, it's so much more interesting to work in that manner, too, to collaborate with other professionals, figure out how to piece it together. What I've seen, especially in the U.S., I guess we're considered litigation society to a certain extent, a lot of lawsuits. But what I've seen with the professionals is that the accountant trying to interpret what the lawyer said potentially to the client, they're worried about getting sued, so they just cut it off and they just won't do it. To me, that's no way to practice. Or maybe I should do it to the lawyer. I'm not trying to pick on the accountant. So the lawyer doesn't want to be responsible for what the accountant says, so they just say, you go tell the client. But to me, that silos everyone and combines you to work in a space, and it breaks down, we're going to know how to coordinate with each other, where the holes and gaps in the communication are, because part of it's my expertise, part of it's your expertise. The client's not going to know that because it's not their expertise. And being afraid of being sued, or I don't think it's the right thing for the client. I think if the client's experienced it, I'll say it out loud, that you should probably look for new advisors. I won't put you on the spot to make the same statement. I think we've had another really, really good episode. Let's take some practical tips from everything we talked about and some of the biggest mistakes that can happen. What are some key takeaways you have?
The most important things are when you are setting up into another country, in this case Spain, you have to be very clear on what are your needs in order to choose the right structure. You have to be open-minded and assume that it's going to be a completely different system, and that it's super important, I would say, to have advisors and to have lawyers that are used to work on an international environment because of this that we are discussing. It's not only a manner of saving yourself from risk, but it's also a manner of having the opportunity to focus yourself on the business and let the relation, the accounts, and all these boring things to be in the hands of the people that should be knowing that and coordinate between the different countries.
Perfect. That's well said. And just for some trivia, not to put you on the spot, what are the top 3 mistakes you often see in this area?
Well, lack of coordination area, I would say the top 3 mistakes are not telling us about, for example, what is the role of the parent company, like truly the role of the parent company. So we get missed on many information and things that can be very interesting from a tax perspective. Or maybe if you're a highly regulated industry, it helps, for example, knowing some things. And sometimes clients, they don't tell us just because they don't know or they don't have the access to that information. That's number 1. Number 2, for example, you mentioned before, transfer pricing. It's crucial to coordinate with the other advisors in this sense to really understand the topic. Number 3, I would say, it's also a matter of tax and financials. If you are, for example, a branch, I pointed that out before. If you're a branch and you're in Spain, you need to coordinate with your advisors, for example, in another country in order to close your accounts in Spain. And if they don't match, you might have penalties. So it's also super important to be able to coordinate on these things. And you asked me about 3, but I'm going to give you 4. Something that we see a lot is that when you're in the process, for example, of setting up a company in Spain or a structure, if you don't coordinate with the lawyers in the home country, it can be very difficult for the client to really keep a track on the process because they don't have time. They shouldn't be worried about these things. Okay, and at the end of the day, the process can be long or can be bureaucratic or can be complex for them, and it shouldn't. And if you leave your lawyers to coordinate with each other, you just have to wait until the day that they tell you, hey, we have the company ready to start. And that's it. And I think that's something that clients need to also take into account, that we are able to speak about these things between each other and make their lives easier.
Yeah. What would you say is one piece of advice you'd give to any U.S. company before expanding into Spain? I bet we touched on it already.
My piece of advice, I think, would be to have a plan and to have a good lawyer and advisor supporting you.
I've gotten that message. And then, what founders should prepare before speaking with advisors? So they should come prepared, right? They shouldn't just be like, I want to go to Spain. You're like, why?
Exactly.
Anyway, they should be prepared. I think it's going to be, they should understand what they want to do in Spain, right? So then you can give them advice.
Exactly. You have to know which is your plan and what are your needs. And just by telling us that, we can help you in telling you which is the best way of starting, which is the best structure, what are going to be your obligations as well.
All right. And Meritxell, please give us a closing, and then I'll say a few words. And this has been another great episode. I greatly appreciate you and your time.
Well, I would say, just to summarize a little bit everything, that nowadays expansion into other countries, it's a must. I think if you're a company that wants to grow, accessing into the Spanish market, it's a great gateway to the European Union. But you have to be open-minded because it's a completely different system. That's why it's so important to have trusted lawyers and advisors in the process. And you also, when you are going to expand, it's great, but you have to have a plan and a strategy. So your expansion is very productive, it's efficient, and you can feel safe during the process as well.
All right. Well, thank you for that. This was wonderful information. I'm here with Meritxell Mont of Capital Auditors in Spain, a tremendous corporate attorney. Thank you so much for speaking with us about companies going to Spain. I'm Chris Klug of Basswood Counsel, and thank you again for joining another episode of Under the Basswood Tree.
Thank you.
We hope you enjoyed this episode. To stay up to date with the latest legal insights and Basswood events, please follow us on our Basswood Counsel LinkedIn page and visit our website at www.basswoodcounsel.com. Thanks for tuning in, and we'll speak to you next time.